Hello and welcome everyone to today's webinar, 10 Considerations for Switching Gift Card Providers. My name is Ryan DeLello. I'm a restaurant and retail analyst for Paytronix, and I'll be your host today. We'll start today's presentation with a look at the agenda. First, I'm going to lay out a few reasons why you might like to consider investing in a gift card solution, and then I'll offer some tips for starting out and managing a successful gift card program. From then, for those of you who are considering switching providers, we'll consider 10 tips there for easing that migration process. And then we will wrap up with sort of an overview of how gift card programs can best serve your overall guest engagement strategy, summarized with some key takeaways, and then I'd be very eager to take any questions at the end. For those of you that may have a question at any point during the presentation, please feel free to use that question bar on the side. A few of you got practice with it already, and I will answer your question at the end of the presentation. So first, why gift cards? A few reasons here. At first, it's helpful to think of gift cards as almost like mini bank accounts that all of your guests are opening up individually. You receive their funds up front, which buffers your bottom line, and then you lock in their business in the future through the stored value. Another reason to consider gift cards is that they're unlike your bank account, they're largely a great benefit during the holiday season. They make for a great gift, and they also provide brand advocates with a simple way to refer friends and family to your brand. Gift cards can also bolster relationships with local communities in the form of gift card donations. And they can also, through their cousin comp cards, help in recovering dissatisfied guests after a bad experience. So with those perks on the table, let's take a look at a few gift card tips. Now, the first is expanding your channels. Arguably, the most essential part of your gift card program is just getting the cards into your guests' hands. Extending the presence of your brand beyond your locations gives your guests the opportunity to share their passion for it. Selling gift cards in store, enabling orders online, and offering virtual e-gift cards are all important aspects of really expanding your channels and meeting guests where they are. Another tip here is sort of more in the world of management, and that is to consider the different ways in which selling gift cards via third party, as well as between store locations, adds complexity in terms of the accounting. And the paramount realization here is knowing the limit of your spreadsheets. So tracking sales fees, discounts, and breakages across multiple gift card programs within a multi-location entity can really cause headaches for any finance group. Today's software tracks discounts and costs with each type of gift card, enabling corporate to control when they are deemed expenses on the P&L and assigning them to franchisees as appropriate. So when selecting a gift card software provider, make sure that the platform delivers the requisite automation to avoid manually tracking gift card costs and discounts. So breaking this down further, discount tracking is a huge part of that accounting automation. In the example on the screen, I'm showing how a discount tracking works on a gift card purchased at a discount from a big store, in this case, Costco. Here, the outstanding discount is monitored as a percentage based on the value of the card. Let's say a guest purchases a $100 card at Costco for 90 bucks. Some providers can track that discount as a percentage of the value that remains on the card. So say that guest spends $50 on a recent visit. The outstanding discount will be tracked as having decreased at the same rate as the card value. So in that next box, instead of a $10 discount, it will appear to your financial team as a $5 discount. Because the value of the card has fallen by 50%, so too does the remaining discount. The system then automatically cuts that liability in half from $10 to $5 and so on and so forth. And as you can see, the guest then came back and redeemed another $25, and that stored value discount went down to $2.50. This automated process makes it much harder to inaccurately account for outstanding liabilities and expenditures. Another necessity for automated accounting here is money movement. If you have franchises, you're very familiar with the term which refers to the shuffling of funds between locations and franchises as gift cards are purchased and redeemed at various stores. Obviously, you want your guests to be able to take their gift cards to whatever location they happen to be frequenting, but it means that store A may have sold the card while store B is actually serving the guest and accounting the revenue. Money movement can be a really tall task, especially as the number of franchisees grows. So it can be a huge help to have a provider who helps manage this for you. There are two forms of money movement. What we're looking at on the screen right now is centralized movement. And that is, as you can see through the arrows, all of the funds go to a corporate bank account and corporate doles those funds as the cards are used, addressing it to the location at which the card was redeemed. Now, there's also decentralized money movement, which means that each franchisee's bank account holds on to the money they made from the gift card sales, and that money is then taken and given to other franchisees as the cards are redeemed. If you have a gift card provider who doesn't manage this, that means analyzing enormous amounts of data every transaction in which a gift card is sold or used, and then tracking sales across locations and balancing who's owed what. Another tip here is to be ready for audits. The reconciliation of gift card stakes and redemption across systems is time consuming. Reconciliation of gift card sales and redemption across systems is time consuming, and restaurants need to be able to trust liability and redemption figures for financial reporting. When the gift card software is directly integrated to the point of sale system, reconciliation time is reduced considerably. Being able to report gift card liability in a timely and accurate manner is paramount. So look for a provider that delivers accurate reporting through processed auditing using the Statement of Standards for Attestation Agreements 16. It will save you time and energy. Another tip here is to avoid guest friction. With gift cards, you want to make it easy for your guests to acquire and redeem stored value. Ensure that the funds are redeemable both at the point of sale and with online ordering. When high frequency, modest check brands make payment convenient for guests, we see visits increase. Automatic reload improves the guest's experience by enabling them to put value on their gift account and redeem it without disruption. Making that easy also boosts sales. It should be secure and simple to check gift card balances inside a restaurant at the POS too, as well as outside via mobile apps, mobile-friendly web pages, and interactive voice response. So altogether, going the extra distance to make gift cards as easily usable and navigable as possible for the guest ultimately is going to benefit your bottom line. Another tip is to keep your franchisees happy. When franchisees are redeeming gift cards but settlement funds are late or short, they get mad. Moving money through the chain for gift card settlement needs to be accurate, reliable, timely, and automated. When franchisees are happy, you're happy. Now, whether you're running a centralized or decentralized money movement system, it's critical to limit the time that the brand's accounting team spends on managing the gift card program. Is keep your guests happy. We've all been here. A guest is unhappy and right. And handing that guest a gift card for $25 or $50 may seem like a quick, easy operational solution, and the guest very well may come back to redeem it. But handing out gift cards as comp cards can cause a huge nightmare for your accounting. To spell this out a little bit more, I want to look at some of the differences between gift and comp. The differences are not huge, but they are very important, and this is something that a lot of companies overlook. Gift cards are stored value cards in which the guest has exchanged currency for the card, effectively storing their own funds on it. A comp card is one that's purchased by the marketing team, so it's filed as an expense, not a liability, and is then given away to an employee or guest as part of a promotion. When a gift card is purchased, it's accounted as a liability. When a comp card holds company funds, it's reported as an expense. Then when a gift card is redeemed, it's accounted as revenue. It's ultimately that guest's money. When a comp card is redeemed, it still remains the company's money. Now, because these cards have the same function for the card holder, many companies use them interchangeably, but that can create a massive headache for the accounting team and is very costly to the business. Two reasons for that. One, for companies with outstanding gift card liability, they have to pay taxes on it. Comp cards, on the other hand, do not have this requirement, as this is an expense on the restaurant's part. In this case, the restaurant is giving away something for free, thus not to sales or income tax. Now, when the question comes, who is responsible for paying the sales tax on an expired, unredeemed gift card? These laws vary state to state, but with a gift card, the restaurant is responsible for paying that tax. The last huge benefit here is that there's no minimum expiration date on a comp card, whereas gift cards have a 5-year minimum. So say you open a restaurant and you go to a local community event and you give out $5 to everyone who attends the event to come by your restaurant after. You can set that comp card to expire tomorrow, next week, next month, etc. But with a gift card, it must be valid for 5 years. And so comp cards are also great for placating a dissatisfied guest without losing revenue. If a guest has a bad experience, instead of comping the entire meal, restaurants will give them a comp card with a shorter expiration period. With a fully separate comp program, it's really easy to keep accounting separate. Plus, comp cards are more flexible and come with fewer tax issues. Now I want to talk. So here are 10 things to consider when switching gift card providers, and the slides to come will break down each of these in more detail. The first is data factors. Check the current contract and figure out what your relationship is with your data. First of all, do you own it? Secondly, is there a fee to access your data? Next, how long is it going to take to access your data? And be prepared for a cutoff date on collecting data. And then lastly, you're going to want to test physical cards with a new provider to ensure that the data on those new cards has carried over successfully. In addition to data, you're going to want to consider who's making up your team to handle the gift card migration. And a gift card migration is critically a cross-team effort. So first, you're going to want members of marketing to handle the promotions, to handle all of the creative development, i.e. what the program looks like, and designing the account balance page, and any other sort of creative that's customer facing. You're going to want marketing to be involved. You're also going to want IT for testing the POS as you move over to a new provider and ensuring that all the configurations of the new program are correct. Next, you're going to want some finance members, those to do a liability check at the critical point before the migration, as well as finance people to ensure that the reporting is up to par or better than what you had with your previous provider. And then lastly, you're going to want to involve operations to align the configurations with the environment. Everyone on the team, from marketing to IT to finance, can be doing their jobs perfectly. It ultimately comes down, the success of a program ultimately comes down to how hammered in the operations are, ensuring that when the guest comes in and redeems or purchases a gift card in whatever way, it's a seamless and personalized experience. So here's sort of the bird's eye view of the migration process. So let's say in the furthest to the left, you're reviewing your program, realizing that there are a few shortfalls, and you're beginning to look at a different provider. You want to next validate the card data, make sure that the new system that you're considering aligns with all of the previous use cases of the gift card program. And then you're going to want to do a trial test, ideally in a lab or in slow hours so that it doesn't affect the guest experience at all. And as part of these tests, you want to simulate a switchover, figure out all of the different data migrations and changes to your POS configuration. And then you're going to want to get finance involved to do a liability checkpoint, ensure that all that data is going to come across and that there aren't going to be any, there isn't going to be any data slipping through the cracks, particularly on the accounting front. And then finally, you'll migrate the data and go live. So crucial to this process is checking card inventory and ensuring that from the guest perspective, all of your guests are able to keep their cards in their pockets. So the migration may be a daunting task. You've got all of these gift cards in circulation. Maybe the idea of migrating and deactivating is overwhelming. But the most valuable players in this whole process are your guests and your finance team. You should make sure that all of the liability numbers that you are seeing prior to the migration remain after the migration. Now, the best way to complete the migration is when stores are closed. For brands that have 24/7 locations, a migration can happen in one night. So choose some off hours where business is slower. Make sure that you are giving yourself time to migrate all of that data down to the cent. And that prevents doing it during a slow hour or during off hours prevents any blackout period for guests so that they can always use their card when it's practical and they'll have no reason to even suspect a migration in the first place. Next, I sort of grouped these considerations all under the sort of bigger idea of digitizing. And that first part of the migration here has to do with ensuring that your POS configuration is ready for the change. So as I mentioned before, testing the migration in a lab or during off hours and ensuring that all aspects of your gift card solution are playing nicely with your point of sale system. Next is considering your online ordering integration. Ideally, if a guest buys a gift card, they should be able to redeem that when placing an order online. Consider any additional need for digital creative and sort of addendums to the user interface to allow a customer to say on the last checkout page of an online order, select pay with my gift card balance. And another popular sort of use case for gift card programs today is via third-party channels. So prior to the migration, your team is going to want to consider which third parties you'll partner with. Make sure that as gift card pricing varies between third parties, especially with discounts, that you have some sort of automated way of tracking that. And then finally, a very practical concern here, but as you're boosting sales through third-party channels, make sure you have the sufficient card quantity to support that higher purchase rate. And then finally is ensuring that all of your reporting is on par or better than what you previously had with your older provider. Really, for the sort of table stake for today's successful gift card programs is a full reporting suite that handles on an automated basis your liabilities, all the redemptions, reconciliation between locations, and money movement. And finally, think about the cadence with which these reports are being made accessible. Ideally, within your provider, you have a live reporting suite that is accessible at any time, providing you with statistics in real time. Now, finally, I want to sort of wrap up this presentation by thinking of where do gift card programs reside within your overall guest engagement strategy. The Paytronix team has seen overwhelming positive results in the way in which gift card programs interact with other guest engagement solutions. So first, combining gift and loyalty, we see about a 2.2 times amount spend on combined gift and loyalty cards. Similarly, within instances in which gift is integrated with online ordering, we've seen a 6% increase in average check with gift card redemption. And lastly, when you pair gift and comp and ordering, we've seen an 11% increase in reorders from guests who give 1 to 3 stars in feedback and receive a response within 24 hours. So we're really seeing the ways in which gift cards can act as a sort of dynamic solution for bolstering the effects that you may be getting from pre-existing guest engagement solutions like loyalty and ordering. We've also seen how comp cards, especially through a more digitalized touch point like online ordering, is still a great way of getting in touch with guests quickly and saving those guests sort of writing their experience, making their experience right again for those who are dissatisfied and may have left a dissatisfying review. So some key takeaways to review here. First, when migrating card data, look for a provider who's going to make the process as smooth as possible. Ideally, guests don't need to know that you've made a change. Next, know the differences between gift and comp. Comp cards are not subject to the same taxes as the gift cards and are not held to the same expiration standards. Next, look for a provider who will automate and track third-party sales and discounts to ensure accurate reporting, especially as the price of gift cards and discounts are increasingly varying as you expand your channels. Then consider how solid gift card providers manage money movement between franchises, saving the restaurant business, time, and effort. Lastly, ensure your guest engagement solutions like loyalty and online ordering align with your gift card program so you can be seeing those sort of symbiotic effects as we explored in the previous slide. Thank you all very much for attending this afternoon. I hope that you have a great day.